for a show, and Dabur's earnings flashing in front of you on your screen. 1651 is what they've done for their top line. That's the sales picture versus a comparable of 1462. And I'm just awaiting what they've done in terms of their PAT as well. 186 is what they've delivered. That is actually bang in line with the ET Now poll. 185.5 is what we were actually expecting. So that's pretty much in line. I just want to compare what the top line is looking like, because we were expecting the sales to go up by about 13.5%. 1600 is what we were expecting. 1651 is what they've delivered. So in line numbers. The margins as well, we're expecting an expansion, and we're expecting the EBITDA margin to come in at 15.2% for this quarter. The volume growth, that is something key that you would want to watch out for in terms of the domestic business. We're expecting a total volume growth of about 9% to about 8 to 10% actually is the analyst bandwidth that they're working with. The recent distribution expansion as well is also going to aid the volume growth for Dabur this time around. Of course, we've seen the kind of outperformance from the entire FMCG space, Dabur included, and most of these stocks have held out well. So let's see whether or not we are getting an earnings reaction on the stock price too. It's a 13% appreciation on the top line, and the PAT as well has come in bang in line with the ET Now estimates. The stock now going down because you're seeing some profits being taken off. The rupee depreciation though could impact the margin, so I just want to see what sort of margins Dabur has reported for itself. The stock now down almost 1.5%. Of course, the international business as well, so the segmental performance is something that we would want to look out for when it comes to more details on Dabur's business parameters. Suruchi Jain joins in to talk about Dabur's earnings. Suruchi, your first take on Dabur?
So I think earnings are, broadly in line. I think the market is just reacting to the recent run-up, and we do believe that at current prices, Dabur is slightly overvalued. So I think, as you mentioned, there is a little bit of profit-taking happening right now. Overall, I think we're quite confident on the long-term investment thesis on Dabur, and we're quite confident that, margins will remain robust. Historically, Dabur has generated like 16% of EBIT or operating margins, and we think they will remain in the 15 to 16% range. So we're quite confident that a firm like Dabur, which is quite recession-proof, will continue to be profitable.
Suruchi, that's the biggest fear, right? Because the EBITDA margins have come in at 14.58%, and that's well below the ET Now expectation. 15.2 is what we were expecting, and this has gone down from the last time as well, because it's a comparable figure of 14.75. So it clearly seems that the rupee depreciation has dented the margins for Dabur.
So I think in terms of, rupee depreciating, I don't think it impacts Dabur as much as because 70% of their total sales is from the Indian products and from the Indian domestic consumption. So I actually think that it's not a matter of rupee depreciating. In fact, this year I think the overall what you're saying is your expectation 15.2 should still happen in the due course of time. You have to understand, first quarter for Dabur is usually slightly weak, and they tend to pick up their profitability and their performance in the later half of the year. The winter months are the best for Dabur usually. So I think the earnings will pick up gradually and will meet our expectations.
So after the bout of profit-taking, which perhaps we may see considering the recent run-up in Dabur and the kind of valuations that some of these FMCG names, not just Dabur, are quoting at, should one again look to buy into stock at some sort of declines?
See, I think it all depends on the investor's time horizon. So what we're actually seeing is, the rupee has depreciated because people are investing more in the dollar. With the uncertainty increasing, the same way people will invest more in consumer and pharma stocks for the short run. And for the long run, if you have a longer time frame in mind, I think consumer and pharma stocks are still have the most stable, profitability and revenue growth trajectories. But from a short-term perspective, I think there could be a correction. And so if you have a shorter-term horizon in mind, it may not be the best to invest at this point.
Okay, Suruchi, good chatting with you. Appreciate you taking the time out. And after that bit of a knee-jerk reaction, you're again seeing some perk up in Dabur, which is again trying to claw back into the green, down just about 0.2% right now. Of course, it's important to note it's the margins which have disappointed this time around. They've come in below expectations. More importantly, they've come in below what the comparable was the same quarter last year as well. But like Suruchi just highlighted, you have to factor in the recent run-up in the stock price, so perhaps just about a profit-taking setting in, and the kind of valuations that Dabur was quoting in at, and also that traditionally the monsoon to summertime is a weak quarter, or rather the first quarter is traditionally the weakest for Dabur, as is the case with the other FMCG companies as well. Dabur currently in trade down about almost 0.5%. Back to the market then, wherein the banking pack has really been taking it on the chin. Let's quickly bring in our experts on board. We've also seen a crack of 6,000 in the Nifty. 59.93 is where the Nifty futures are at this juncture. CK, start off with you first then. Your take on the market today first, the index trade that is.
See, it's become a new trend.